What's up, traders? Anthony Crudele here, and thank you for tuning in to the Futures Radio Show podcast. Do you truly have a trading plan? Most traders think that they have a trading plan, but it's probably missing some important elements that are attributing to their lack of growth and success as a trader. In today's live stream, I'll be chatting with Rentfrew and Fleri V about developing a trading plan. We'll be taking your questions and comments live in the YouTube chat, so please put them in there as I will be watching them throughout today's show. Today's podcast is sponsored by TradeStation and FTSE Russell. Currently, TradeStation is running a promo just for our audience. New users are going to get 50% off brokerage fees for the lifetime of their account using the promo code FUTRAFZT, as long as you open an account by July 30th. Go to tradestation.com/Anthony to learn more. Are you watching the stock market, specifically the Russell 2000? The Russell 2000 is a key benchmark for small cap U.S. stocks. Be sure to check out the E-Mini Russell 2000 future symbol RTY and micro E-Mini Russell 2000 future symbol M2K. To learn more about FTSE Russell and their products, please visit FTSERussell.com. All right. Well, we've got Fleri V and Aaron. What's up, guys?
Hey, what's going on, Anthony?
Great. Hey, great to meet you guys in person. You know, we've been chatting on Twitter a lot over it seems like a long time now. And I'm really excited to have the two of you here today because we're going to talk about developing a true trading plan. And like I mentioned in my opening comments, I think that so many traders think that they have a trading plan, but they probably are missing some key elements that are probably holding back their progress and really not letting them get to that, what we would say, that next level. Sure. So today I really just want to start off with what I think is the key elements, I should say, that I have in my trading plan. I kind of just want to go through that with you guys and have you guys tell me what you think about that and what are in what you believe are the key elements in your trading plan. You know, and I looked at my trading plan before I came on today and I said, what are the things that I have in it? And in my mind, I thought there was going to be all these different other things. And when I really looked at it, I said, really, the only things I really have narrowed down are market, time frame, style, obviously my technical and macro strategy, and then what am I doing off the charts? To me, that encompasses my entire trading plan. I think maybe we'll go with you, Fleri, first. Those things that I mentioned, am I missing anything? What do you think about that?
You know, I think, and you probably have this in there, but maybe you just didn't call it out, but nuance is a big thing for me. And, you know, that just, you look at kind of the same things and they repeat and you start to learn these nuances, and some of the best, most consistent trade setups. I don't even know if they're really setups. It's it's just kind of that nuance that comes from watching the same markets or one market, you know, kind of over and over. So nuance would be a big one for me, which kind of ties into setups. And then also like that top-down approach. But I'm assuming when you say time frame, you're kind of taking it down, you know, from a top-down type thing.
Yeah, no, I love that you said nuance. I mean, it's something I didn't even really think about. It's something I actually took for granted, but I'm so glad you mentioned it. I mean, one of my mentors, Ira Harris, who's been on the show a bunch of times, we actually did a show just talking about context and nuance. Aaron, you heard what Fleri said, what I said. What do you think?
The word you just said is the key for me. So context is pretty much everything. And I had a mentor, Revere Trading, definitely drove that home for me and taught me the real benefits around kind of creating a story around what the market's trying to tell me in terms of the price action, in terms of the profile, the volume, where we're spending time. And so for me, building the context more or less helps me understand who's in control where. Like if we're staying above a certain area, who's in control there? If we go below that, who's in control down there? And really trying to understand what the story is to keep me on the right side of the trade, keep me unbiased, to where I can come into the day somewhat mentally flat in terms of any directional bias and just ready to go with the flow.
Aaron, I'll stay with you. How long have you been doing this?
Actively trading since 2012, but primarily stocks and options. up through 2016. I really started getting into futures around 2018, and then more actively in 2020, very active. But it's been, I mean, my first trades were out of high school. I've always been fascinated by the market. My uncle was a big trader. So he would give me stock tips even when I was a kid. So for me, it's been a lifelong obsession with markets, and but eventually led me to futures because I think it's a little bit more consistent in terms of income than stocks, where I don't have to hold the drawdowns and things like that.
Yeah, for day traders, I think that futures are the best, and I can go on and talk about a lot of reasons why. Different show probably for a different day, but the reason I asked you that is because, and Fleri, I'm going to get to you about the same question.
Sure.
How long did it take for you to really realize that you had a trading plan, like a true trading plan? Because like I've been mentioning this, I think that there's so many traders out there that have what they think is a trading plan, but it's not complete. When did you come to the realization that you said, you know what, I actually finally have one now?
I would say that what I used to think of as a trading plan was really just my directional bias coming into the day. And that I really didn't have any areas of confluence I was looking for, any real context on the market. And a lot of times it was driven by simple, I guess, kind of a gut feel or bias that it's come down too much or it's gone too high, and let me try and trade it the other way, irrespective of what the actual auction was telling me in the market. And so probably for the last 2 to 4 years, I've been incorporating much more in terms of planning and development, much more on the technical analysis side, on the early side, using traditional technical analysis, but that didn't work real great for me with futures. And that's when it got me much more into the volume market profile, order flow type stuff for creating my plans now.
Yeah, we're going to dig a lot deeper into both of these guys' plans. So we're going to be going to the charts and we're going to be looking specifically at what they're doing. But I want to go back to you, Fleri, because, you know, I started off with asking Aaron how long you've been doing this, and then really how long did it take for you to really recognize that you had a true trading plan?
Sure. Futures markets, about 3 years full time. Started in cryptocurrency markets, kind of just trying to buy and hold Bitcoin, and
started in crypto.
Caught a bottom there and a parabolic move up. And, through that process, kind of learning that you had to go onto an exchange and start to sell, and seeing what those exchanges look like, sort of reignited sort of a long running passion about watching markets. And, kind of similar to what Aaron was saying, just, something that I've always just been keen to watching. And, it's funny, like almost developing this process, even without even like being active in the markets, but just kind of watching and, that rabbit hole we all do, like trying to find all the right content and things to learn. But, that transitioned into trading actively with crypto markets and then jumping into stocks. But I think similar to Aaron, just really struggled with the extra challenge that the stock market presents. I mean, it's one thing to be able to trade well, to, build a process, but there's so many extra elements, I think, with trading stocks. They're crowded too. So when you do finally find your process and you got your scanners all, dialed in, you dialed your scanners in and now you're in the trade with everybody else. And, again, just that extra element kind of made it something where when I discovered futures, it sort of brought me back to that crypto, only watching Bitcoin and really, maybe a few other of the altcoins, but, that getting sort of, intimate with that product and knowing the nuances of how that one product moves. When I saw futures markets, it just was like that click moment where like, okay, this is where I want to spend my time. Plus they're kind of baked in leverage too, which is pretty similar to, crypto trading, or at least some elements of it as well.
Yeah, I just think that, for the day traders out there, futures are such a great product. And like I said, for some of the things that you mentioned, I think when you're becoming a day trader, at least for me growing up in the futures industry, really, there's just so many benefits to having the futures when you're trying to build consistency. Because number one, most of us are going to be talking about trading an index. So we're trading the same market over and over every single day. When it comes to stocks, a lot of them have different personalities and you're hopping from stock to stock. Yeah. I know a lot of people will say it's just a chart, but I think that you develop a better relationship when you're dealing with an index that's trading every single day. You're trading that same product every day. So you really do learn a lot about that context and nuance, and specifically the nuance, right? I mean, the S&P is different from the NASDAQ. You could look up at the screens on the business news networks and say, oh yeah, well, they're all up today or they're all down today. But boy, the path and how they got there could be very, very different. And they each are their own little beasts. I want to dig in a little bit more about your processes. And I think maybe what we'll do is we'll go with you, Aaron, first. And
Sure.
what I want to do is I want to pull up your screen here. And what we're going to talk about, Aaron, is what are the keys for developing a trading plan? And we'll go here. I believe I should have your stuff up here, right?
Yep.
Okay, good.
All right. So for me, the key is number one to, I think, try to ascertain who's in control of the auction. And so for me, I think every day it's important to look back at the larger time frames, the monthly, the weekly, the daily. And I always kind of start with the monthly just to see where we're at in some of the major auctions, in some of the more large distributions. Look at the past distributions in that area. For example, if you look back here, you see multiple monthly areas of confluence, and you'll hear me talk about confluence a lot when discussing a plan. But a monthly high, value area low, monthly low, monthly low. This was an important area for me to hold. Dropping below here, I think, draws us all the way down into here. And you can see that we held there. So I'll look for that for longer term swings and stuff like that. But on an intraday time frame basis, starting here, trying to figure out where we're at in the larger auction. You can see that the low volume node from this month was basically the high today. So little areas of confluence like that, and then dialing it down into the weekly. Same thing, looking for where is there no interest, where are we running into resistance support, areas of confluence. We have a weekly low volume node here. And then when you dial into the daily, that's the bottom of yesterday's double distribution low volume node. So this is an important area that I would take note of in my plan. For example, dropping below that, I want to be a net seller. If we can hold above that, I want to still be looking at longs. So little things like that. And then getting down into the daily, I want to find and take the same elements I'm looking at on the monthly, the weekly, and then apply it to the daily auction. And so the way that I look at that is usually through areas of balance. Where are we currently spending our time? Where are the distributions? Where is there no volume or no interest? And where might we go? Should we break to the next area? And this is a chart I've been using a lot for the last several days. But really, yesterday, my thesis was essentially, if we can hold this bottom area, potential that we rotate to the top. Only reason is because it's the bottom of this distribution. It's a very clean bottom that's been defended multiple times. We have two gaps right here. So below that, I obviously want a short, potential for a bounce there. Simply building the context around what's happening in the auction. And when we look at yesterday, the little area here that we accelerated through, left single prints on the profile, that's also that 37, 97, 50 area that was important on the monthly and the weekly. And then I'll attribute that to my daily plan and kind of look at that as a strong area of importance to stay above. Obviously, we're having trouble up here. So starting to build a story, I think, around who's in control of the auction at this point and at what point that changes, to me, is one of the key elements. And from there, I take it a step further and I start to look at, obviously, the overnight inventory. What happened in the overnight session? Are we trading inside of yesterday's value? Are we gapping up? Are we inside yesterday's range? Are we able to take out the prior day's high and things like that? Or what I'm really looking for before as I'm writing the trading plan to develop actual trades. So I literally write out if this, then that type of scenarios for each trade. If we come down and I see buyers defending this area, then I want to take this position, targeting this, this, and this. And really what I'm doing for myself there is trying to think through the process before actually getting into a trade, because something I noticed a long time ago is I would get into a trade and have a good entry, and then I'm scrambling to figure out kind of where's my target, where should I take profits. And if I don't have some sort of a set plan, oftentimes I'll leave decision making to the emotional side where I'm just getting out because I'm fearful it might come back down and stop me. So, a key element to the daily plan for me is almost defining exactly what I plan to do, depending on what happens with the market, whether it goes up or down, creating a binary sense of how I might engage with the market. And once I have all of the areas that I'm looking for, the zones of importance for me where I might want to engage with the auction, I then create essentially like literal zones on my chart like this. So I'll just show you my trade screen. So essentially I have my daily that I look at here with some levels of importance to me. This is that confluence zone towards the low of that distribution, which I thought was important to hold yesterday. And then I put actual confluence zones from all of those areas that I spoke about on my chart. And that's where I look to engage with the market is, potentially shorting below this, targeting this level, potentially targeting down to this level, really building it into a somewhat what can be a complicated process, trying to simplify it as much as possible by adding those confluence zones and how I can manage risk around them. Because if I take for example, short here, I can just put my stop above it because I know it's an area of importance for me. And trying to dumb it down as much as possible to remove any too much thinking that goes into the decision-making process. So I think that's really what I would say the key factors are for me is taking a process from the top to the bottom, finding the most important areas of confluence for yourself, and then really thinking through how you might trade that in certain areas to not only remove bias, but also give yourself a little more conviction once in the trade. Is how it's worked for me anyway.
All right, I want to pull back a little bit and just talk about a couple of things. Fleri, I had to
Sure.
mute your mic. We were getting a little back. We're still getting it.
Some feedback?
Yeah, we're getting some feedback. So I'll mute you until when we get to you, just so we remove it. But so a couple of things I want to talk about, Aaron, is, and I think there are a lot of things you talked about. First off, I want to know, and we'll talk to Fleri about this too. It feels to me like a lot of, I would say more of the newer or the modern day futures traders are using order flow, volume, those types of things versus using just traditional indicators. Like when I looked at your charts, a lot of what you're looking at is coming from volume profile, or whether it's market profile. I don't know how much order flow you're using, but it's really more of a volume based strategy, it seems as though, than it is, an indicator based. And I mean, I know volume can be an indicator. I'm getting more comparing why that is. So why did you choose that route?
All right. So there's a couple different elements there, and I'll add one more. Probably the biggest part of my strategy that not a lot of people use is actually I'm very focused on balance areas. So take all indicators away, all volume and everything else. It's simply based on price action, right? So
yeah,
I monitor and track all recent important areas of balance. This was during ETH, but I'm really tracking and logging where are these areas of balance happening, and if we break from balance, where might we end up? And you can see that these areas of balance continue to work, and it's something that I don't know a lot of people that really follow these, but it's a key part of how I create levels, potential downside targets, areas that might be important in the auction later on, and they have really nothing to do with volume or market profile or anything else. And if you look at past balance areas, and this is an interesting chart. So these are old balance areas from 2020, the blue lines, okay, all the way back from 2020. And
so is this a monthly chart or weekly chart, or is it just?
So this is a 2-hour bar chart, but
I see.
But it's expanded a little more. These are important balance areas that were important in the auction on the way up. And as we've come back down, and if you think about it in a kind of simple terms, at one point, those balance areas were the fairest price for several days. I usually look for 3+ days to be a legitimate balance area, similar highs and lows, similar point of control, like all the volume kind of concentrated in the middle. And you'll find that when we liquidate, we often will come back down to that prior area of importance in the past, especially if it's a new low. We'll oftentimes bounce at those areas. So that's definitely something that I outside of market profile volume and order flow and everything else that I look at and monitor. And I don't know if you can see my whole screen, but a question I get a lot is about execution. And so this is on my other screen, which there's a lot going on here. But this kind of narrows even deeper into the volume. And Fleri will talk, I'm sure, a lot about Delta because he's a wizard with Delta. But it's something I definitely pay attention to as well. So as we approach my levels of importance, the zones and the confluence zones that I mentioned before, I'm looking for specific things in the footprint as well to actually hone my execution, getting as close as possible to the low, specifically a taper into a low that's absorbing sellers if I'm looking to go long. Okay, so a nice volume taper into a low that's absorbing can often trigger a entry for me as long as it's close to one of my areas. And similarly, as we're trading higher, I want to make sure that they are pulling orders above me, stacking orders below me, that they just continue replacing the bid. If I'm long, and then same thing, if I'm long and I see us start coming into an area and volume starts dying, and buyers are getting absorbed, then I might take profits early and capture the gain. So I use a little bit of everything. But for me, it really this is really what I focus on maybe a minute before I enter, maybe 2 minutes before I enter. But my primary focus is always going to be first this, then where should I actually look for that entry and manage my risk from? Where should I place my stop? And then as we get into that area, then I dig into the minutia of order flow and the footprint, that volume taper, the characteristics that I want to see where, okay, buyers are showing up here, sellers are getting exhausted. Let me take this entry to give me the best kind of shot at success there on the trade. So it's like a 3-part sequence for me. Once I have the plan written and everything else, it comes down to first developing where do I actually want to engage with this profile, and then how do I manage risk around it from here, and then also dialing in the entry with the footprint chart.
Fleri, I want to bring you in here. We're going to go to your charts in a little bit here, but sure. I'm sure you're going to talk about order flow. And the question I asked Aaron was, why do you think that so many newer traders flock to volume profile, just volume tools? I mean, a lot of the traders I talk to that have started, I would say, in the last 5 to 10 years, almost all of them are using volume profile, market profile, or some sort of order flow based tool. Why did you flock to that? Why do you like that so much?
Yeah, I think the visual is big. Taking a concept like volume or time with TPO and being able to really see the way that, value is sort of migrating higher or volume nodes are building. And, again, you watch these profiles develop enough, you start to recognize, like for example, we talked about nuance earlier. One of the big nuances would be a destination type trade. And, how often do you see, Aaron mentioned it, like you go from one HVN edge to the next. And so if they reject one node, then you likely go to the next node type thing. I think just like it's very visual, and I think it speaks to a lot of people right out of the gates, that concept of HVNs and LVNs. I think to expand on that though, a lot of people probably don't dive much deeper than that. And there's just so much more nuance, in watching these profiles build. Job from our team is just so good at volume profiling and the way that he looks at it. But, what Aaron was doing there with that top-down approach too, and seeing the way that areas are developing balance, seeing the way that areas are developing accumulation type zones, which is kind of what we just came out of. Again, that visual, I think, is just a little bit easier to see than just zooming out on the bar chart. And I think that, that visual is what makes people gravitate to it, in my opinion.
Yeah. I mean, when I look at volume profile or market profile, when you're looking at it, I'm looking at your screen right now here, Aaron, you're looking at, when you talk about visually, you see these little bell curves, and like you say, you see where the volume is being distributed. And for, I think, a lot of traders, it's easier to go back and look at something like this and have nuance in it than trying to trade like a 5-minute head and shoulders, or to trade, any other sort of thing like that, which, it just seems it just makes obvious sense, because when you look at this, you could say, look, I've seen this before. I think it brings the learning curve up much quicker, because this, looking at it from this perspective, I think it's a lot easier to take in information. I think that's a big part of it as well. I just find it to be so interesting. For me in my career, it's so funny. I started off using market profile. I use that actually quite a bit, and I just went away from it. I don't even really look at too much of volume profile or market profile anymore. And then I see so many new people doing it, and I'm just curious as to why. But it makes a lot of sense. I mean, Aaron, I want to go back to you again. We'll kind of close out with your stuff on your strategy. The other thing I put in is that you're layering everything almost back into one chart. So basically, you have all of this work that you then put into a chart. I don't know if you want to pull that chart back up, or maybe this was the one. I remember I wrote down a note saying that you had all of those levels there. So when you condensed it into an area where you can just look at and start to make your decisions, because I could see how some people, obviously today we're talking about getting to getting a true trading plan. When they look at this and say, how is he finally getting to the point to make a decision? Like, where is that finally coming into play? But obviously the person who has the charts, it's easier to know, but how did you get it to the point where you condensed it and you just were, because futures trading is about making decisions in the moment, right?
Absolutely.
And you don't want to be looking too far, right? And too far and too many different things. How did you get it to that point? And just go over that chart and kind of go through the layers and how it gets you to that point of execution.
Of course. And I think to understand this, it's important to understand the word you guys mentioned earlier, which is nuance. I think with any process, you have to understand the nuances of your own process. And it took some time for me to get good with this, because you can see that the levels are reactive. The zones are very reactive. I tried, when I first kind of developed how I was doing this, to push away market profile, volume profile, and everything else. And I was like, I should just execute just off of this. And I got creamed for 2 weeks. And coming back to it, I don't know when we approach a level if it's better to buy it or to wait until we get below it. The key, again, for me, is first forming the context around what's happening in the larger auction, what's happening in the market, who's in control, in order for me to actively want to get long or short at a certain level. And so the way that I personally use it is really secondary, because first I'm trying to identify where I want to engage, and then I'm using this to really hone my entries and my exits, because these to me are just very likely areas for potential action, or for potential defense or resistance on the upside. So the trade formulations always come from the larger timeframes, and then this is helping me hone the execution side of it to a little bit more precise level, and also giving me kind of a stupid simple way to manage risk, because I could just place my stop slightly on the other side of a certain area. So very visual. It's a visual representation of all of the confluence that I come up with from the other work, that just makes it, to me, where I'm not having to think too much during the day. I can really just watch the auctions around my areas of importance, and even if I get away from the context, I can kind of see where the rotations are at and see how I can manage risk around those rotations.
Last question before we get to Fleri. For you, how much of your trade decision is made before the day even begins?
I would say, about 60%, because I lay out every potential long or potential short that I want to take. And then the day opens and things slowly begin to change as the day progresses. And so, like early in the day, my plan might play out great and I might make a good trade early, and the first part of my plan kind of plays out. But if information changes, then I used to suck at this. So when information changes, I need to change. And that's a big part of coming in without the bias. So yes, if I think this is going to hold, I want to take it long. above it, put a stop below it. Well, if it comes back below and, and then comes like dipping into it, well, it's probably a short. I can't keep with my long bias fighting it the other way. And so oftentimes I'll shift my own trade plan in the moment and throughout the day, just based on new information that the market is telling me. Like, for example, today I thought we'd be bullish if we got above yesterday's high and potential for a breakout. But pretty quickly it was clear that the buyers were just not that aggressive and we were likely to balance for the day. And so I kind of bagged it pretty quickly. And, at that point, the trade plan kind of goes out the window. Maybe it'll come back in when the FOMC announces. But I would say 100% of my trades are planned ahead of the day. And then I would say about 60% of them actually get executed, if that, based on early information that I'm getting from the developing price action around the levels, around what's happening.
Love it. With a lot more to talk about, and we're going to dive more into execution as well, because execution is so important, right? I mean, you could have the best plan on paper, but if you can't execute it, plans doesn't really matter. So we're going to get into that and a lot more. We're going to have Fleri fire up his charts back in 20 seconds. All right, quick break, and we are back. So a lot of great stuff so far, and I thank you very much for sharing that with us. And I'm looking forward to see what Fleri has to say. I mean, it's always interesting to see how different everyone's really trading plans are, and I think a lot of people would say a lot of the volume profile or the volume people, a lot of their plans you would think are pretty similar, right? And I can't tell you how many I've had on here. And there is a lot of similarities, but they're not always similar. And Fleri, I'm assuming we're going to go into a lot more of the order flow side of things, which is going to bring me into, I think we're going to tie that in later. We're going to talk about execution. So we popped up Fleri's charts here. And Fleri, I hand it to you. Talk to us about you and your trading plan.
Yeah. So, before jumping into the charts here, I think my approach to markets and sort of my way to build a process or analysis, my top down kind of looks like building these homework charts, I call them. And each one of these chart books that we'll take a look at is really focused on really one specific study. And some of this stuff is automation from Order Flow Labs, but all of this is available. Like, you could do this all manually. I did it all manually before we automated it. But the idea here is that each one of these charts, until we get to sort of those execution books or like the actual NQ chart book, is focused on one thing. And so, we talked about nuance several times already. But the idea is, when I come to this chart, there's 2 or 3 things that I look for that are going to pop off the page when I see them. And, whether it's nuance or an actual setup, we'll see a little bit of both, or just a level of interest that I know these levels, when they do appear, are so good that I'm going to put them on my notepad. This process kind of starts from all of these homework charts. Then they ultimately will distill down into my actual NQ book for execution. And then from there, each day, I will take basically my notepad. I'm all about kind of like getting the pen out, getting the notepad out, and like writing them down. Each day, I'll take the ATR range. And again, we have like a dynamic ATR range, but I'll take the ATR range and I look for levels of interest, say every 75 to 100 points. And these areas of interest, in a perfect world, are going to be the only places where I'll do business. And, that way I'm only focused in, pretty much the average range. I don't need to be worried about, NQ, sell zones at 14,000, whatever, and I'm focusing my efforts and my attention each day into a certain area. So with that being said, sort of my top-down approach starts on the weekly level and looking at some weekly delta. And so these are our weekly delta pivots. And this shows you sort of this point-to-point journey of the weekly pivot. And, for those that maybe don't know, the weekly delta pivots is a study that we kind of created. And it's looking at essentially the value area. And this would be the point of control of last week's aggressive delta. And then we're actually looking at each of the sessions. So blue is always going to be RTH, the yellow is the Asia session, and red is the Euro. And I kind of use this to create these zones. So the zones are one nuance, and you can obviously see we're bidding off this lower zone quite nicely. But typically these zones don't end up being levels of interest on my chart unless they're really consolidated. What I'm mainly looking for is these bullish and bearish continuations and crosses. And what that is for me is just this small little nuance where the session before, RTH session, was below the other two sessions. So their value is dropping from a delta perspective. And then all of a sudden in this session, they're now above the other two sessions. And so we're seeing this shift above the other two sessions. And that's what I would call a bullish cross. And on these bullish crosses, I look for, or a bullish continuation, which would be staying above the zone, which happened here this following week. I'm looking for about a 5-day ATR at some juncture from Sunday's open. And I look for this to pretty much try to resolve by about Wednesday in a perfect scenario. So if we're talking A+, I'd like to see that resolved by Wednesday. And so again, we're starting with sort of, I hate to use this term, but directional bias. We have an idea of where the auction should go based upon this nuance observation. And there's some other things that we can do there, but that's how I would start my week is, are we bullish or bearish cross? And are we just sort of net neutral? To give you an idea here, like here's UB. UB was a bullish cross coming from below, and it was a bullish cross, and they bid right out of that zone up into the previous zone. So again, a little bit of a directional bias from the weekly delta, kind of giving me that top-down approach. The next one is an actual setup. And so these are the weekly delta pivots for just RTH and the ranges. And based upon expansion or contraction of these ranges, so here, if I just kind of scoot the chart back, we can see this range clearly expands over last week. So that's last week's range, and trend was up. And so I have some very clear setups that I've defined based upon this expansion or contraction. In this case, expansion, we typically want to fade last week's trend. And when I say fade last week's trend, I don't mean for the entire week. I just mean that at some juncture, there's going to be a trade opportunity to potentially revert to mean. And so in UB this week, that would have looked something like selling, 155.14. And you look again to sort of trade from the one down to the pivot and then potentially down to the other one. Again, some nuanced things on whether or not I would take this trade all the way through to the bigger target. But, again, a nice opportunity or a nice example here you can see is they picked up that one, and you're looking for that momentum reversion to mean trade. So, now I've got sort of the weekly delta pivot history giving me a little bit of a directional bias. And then I look for confluences in the setup. So are the ranges expanding and contracting? And is that telling a similar story to what I'm seeing with the weekly delta pivot history? And so, I look, Aaron kind of mentioned these if-then statements. I'm very much doing that same thing. It's like, if we were a bullish continuation, which we were last week in NQ, we would need to go up in order to pick up last week's setup. And this was last week's setup. I actually put this one on Twitter. This was a nice one. Last week's setup was an expanding range, and we wanted to fade last week's trend, which was up. So we were looking to revert to mean from the one to the pivot and down to the one. But it was also a bullish continuation. So, we have to go, and we opened kind of in this area. So we have to go up to pick up this sell. And I have a setup that says, if we can find a reoffer in this zone, let's try to revert to mean back down to the pivot, sort of reassess this, and then potentially take it down to the weekly 1B. And so this is a setup that I will track each and every week. I look for this again to resolve typically by Wednesday, holiday week. So a little bit off, actually the last 2 weeks, but again, a nice opportunity. And we're starting to build sort of some directional biases and some setups. And so then I would go to my next chart. And this one is our session delta pivot history. So if the first one we looked at was looking at this point-to-point perspective of how the auction has journeyed week to week, session to session, this is looking at the way that each session is journeying intraday. So each one of these points represents basically where we put in the highest delta of the session for each of those sessions. And similar to the other charts, there's some things that we've automated here, but patterns that we're that I'm looking to identify each and every week. So this would have been an example of a sell elbow. And, essentially what we're doing is we're looking for where the auction is shifting. And when that auction shifts in this sort of specific pattern, that's what would create this sort of red zone. And we're looking at the delta or the high delta from each session uniformly sort of making that turn. And when that happens, for me, that's a big continuation pattern. So not only do I now have an area of interest, which, I know is a little bit wide, it's 104 to 213, but, we can start to say, okay, as we distill down, where am I interested inside of this zone? And again, here we see a nice retest the next day, and then that continuation pattern resolves. So I look for these shifts in the auction. And I also look for a pattern. It's a setup. It's kind of a fan favorite. We call it the Leroy, or the 3-finger Leroy, based upon like sort of the 3 sessions here, but it's a continuation pattern. And you'll see on my Twitter, I'll post these a lot. But essentially what we're looking for is like a one time framing higher or one time framing lower of these sessions, session over session. So here's one right here. You can kind of see the blue, which is RTH. They put in their high delta here at 744. The Asia session puts it in here at like 797. So we're stair stepping higher. And then finally, the Euro session puts it in at 834. So when RTH opens, we look for that continuation as all 3 sessions are building that delta higher. And we get just a beautiful continuation, trend day up. And so that, again, this pattern, we have it automated with Order Flow Labs, but, visually something that we just picked up from watching these charts, and just the way that we're organizing this high delta from session to session. So this daily version is something that I look at. One of the other nuances with this chart that is important to me is how smooth are their lines. And so if they're sort of uniformly trending down and then building that elbow and then trending up, you're seeing sort of like smooth auctioning. If you start to see some of this, kind of like mess, right? To me, that's accumulation. The sessions are kind of building, they're kind of going back and forth, and it can be sort of an early clue that, hey, this trend from up here that was nice and smooth, you can see, nice and smooth down, it's starting to get a little bit messy, and usually that messiness leads to accumulation, whether that accumulation would have gone down or up. In this case, it went up. So again, sort of like starting to distill down this information. This chart here, I call this the voids and clusters chart. This is just another way to visualize the same data that we were just looking at. But here I'm only looking at the RTH session highest delta from a delta percentage, and we call these SDP pivots. And this is visualizing these from a horizontal perspective. And so if I actually turn my zones off, you can kind of see where they're coming from. So each one of these lines, the genesis of those lines is that spot during the RTH session where that high delta got put in. And so the idea here is, if the big players that are able to put in this pivot, if you can create this pivot, like it's not you and I, I don't think so anyways. These are bigger players that are hitting these spots consistently over and over again. And when you see these patterns, I call them clusters. When you see these patterns where they're starting to cluster and build positions and defend positions in similar areas, you can really start to lean against those areas and, almost treat them like balance, like Aaron was kind of mentioning. You start to learn these nuances of how the market interacts with your areas of interest when it comes in. So this is one of the biggest charts that I use because this gives me the confidence in my other analysis, which is mainly like a trend or swing high, swing low type analysis. To get that confidence going with the confluence of the delta. So if I have an area of interest and the delta is also in that area, that's what's going to put that level sort of on my notepad for the day. So here again, you can see I've kind of identified some of these areas. I call these clusters. And then if a cluster is a bunch of delta being put in, a void is sort of the lack of it. And so if there's no big participants that have been sort of active in an area, typically these are fast-paced trade opportunities or low liquidity trade opportunities, and you'll see the market just zip through these zones super fast. And so a lot of times in my weekly plans, I want to map these out as my big opportunities for the week. And here you have a void. Again, you can see there's like just no pivots in this area. They haven't put delta in, and they just slip right through it. Here you have a void. Again, we go quickly through it and quickly through it. And here you can see these clusters really playing. So this week for me, this 709 to 682 was what I was calling a breakout cluster, and this 390 to 357 would have been a breakdown cluster. So I'm looking for them to either break down this area or bid off of it. And we were kind of joking, on here talking about a process. Yesterday, I said I was going to buy the dip as long as they held this lower cluster. And yesterday, I joined the short train trying to push through it for the opportunity to trade into this void, which ultimately didn't happen. So This chart will then sort of distill into my other ones. And now we get into some, just sort of like general setup type charts. This is one I call an ODR, or open drive ranges. And this study is looking at 15-minute open drive ranges. And as long as we hold a 15-minute open drive.
Explain that. I'm not sure I know exactly what's a 15-minute open drive.
So these are 15-minute candles. And again, this, our version of this study, you could put it on a 5-minute candle. It'll do the same thing. But what it's looking for is that either the high or the low of that first 15-minute candle never gets breached. And so here, this is an ES, we can zoom in and look at this one here. You can see this 15-minute candle. This is the yellow candle. That's the opening candle. And then it's a volume profile on that 15-minute candle.
I see now.
Okay. The low never gets breached. And, again, I think we talked about profiling earlier. I think one of the things that brings people to profiling so much is that like day type, right? Like they want to catch that trend day, or they want to know if it's a balanced day or PB profile. This for me, not only in flow is a great tool to be able to see if we have the potential to be this trend day, or at least how I've defined it. But also to trade these levels upon return. So, the amount of volume that it would take to start a trend day and the amount of protection that a position like this should get upon return, especially when buyers who bought in this first 15-minute candle got this reward. When you come back, which happens right here, and again, right here, when you come back to this area, you can expect a similar reaction, right? If anybody was bag holding that trade that entire time, well, they're going to be happy to get out, break even, which that's a pretty big break even, but, to each their own. And then a buyer, that took that buy the first time, they're going to be incentivized to buy again. So these areas are one of the few areas that'll just jump directly onto my daily plans. And these areas of interest, and in NQ, which I do a little bit more top-down work, I'll actually go in and sort of dial in where was that HVN, where was the high volume of that first 15-minute candle. And I kind of mentioned playing these in flow, but this is a great, like the question people always ask is, how do I define a trend day or catch a trend day early? I watch this 15-minute profile and I watch for them to build this volume profile. And if one end, so in this case, the low of this 15-minute profile was held, if that gets held like in flow or like in the next few candles, that's a great opportunity to try to get in and catch a trend day. So, again, this is a level that goes directly onto my charts. And the weekly IB, this is one that's big for me. So this is the first 30 hours of trading. And again, just some nuances that I look for here, but you can see, we've been sort of dancing around this weekly IB high. Just a sort of like one-off chart that I've really found some good success with. Again, IB being the initial balance, this being 30 hours versus say 30 minutes, or the first two sessions or the first two periods, whatever. And again, some levels of interest that will come from this and some nuance. I think last week I mentioned when we close outside the 200% extension, typically what we see is a continuation and then a large fade. And we called this on Sunday, just kind of looking at this from a nuance perspective. Like you look at these and you go back and you go, again, this was one chart, and then you just get intimate with what are the setups and what are the nuance with it. So I look at the weekly IB, and then, of course, got to have a balance chart here. So I define balance as overlapping value to the right, which is my own personal way to do it. And if I can define balance by overlapping value to the right, then I can also define imbalance, or the last day before we broke out of balance. This is an NQ chart. So then here, I call these imbalance days, island days. And so these are really good targets for ranges. And so when we leave imbalance, typically, you're going to get this island day where it's just kind of sitting there. There's no overlapping value to the right. I look to target these days in this zone, specifically the POX upon return. And typically will range from island day back to island day. And obviously then all of the different nuance trades that you can have with balance. And the reason this balance chart is last in this process is because, and FT71 said this on one of his morning podcasts the other day, but if you break out of balance and they reclaim that thing, and you've got all of your other work telling you that it's short, you better be aware that we just broke down from an 8-day balance and we reclaimed it, because you're going to be in big trouble if all of your other work is telling you to short, because balance is really just going to be that ultimate nuance. And a good buddy, I think you actually know Jay too, but a good buddy He's taught me some really good nuance around these balance area charts. And of all the stuff that we looked at and talked about, I think the biggest thing is that at the end of the day, the market just moves from balance to imbalance and back to balance. And being aware of what state of that current, current evolution or current auction that you're in is just so important. So that comes last for me. And then similar to the way that Aaron had sort of that, how are we distilling all this down? My main way to do sort of top-down analysis is looking at these swing highs and swing lows, whether you want to call them supply demand zones, whatever. Essentially, it's trend analysis. I want to be aware of, are we downtrending on the weekly? And then are we down or uptrending on the daily? Where are we at on the 4 hour? Where are we at on the 1 hour? And so then that top-down analysis for me is really, yes, there's levels of interest from the weekly. And I'm looking to see, like, currently we're trying to build an uptrend, but we're in a larger downtrend on the weekly. But we're currently sort of still holding the last low. So, then we come into the daily. Like, what are we doing on the daily? Well, we're sort of basing and trying to retrace this leg. And so that top-down analysis can not only develop these levels of interest, but then, we talked about that voids and clusters chart. What I do is I bring that information in, and I'm now filtering these levels. And so these yellow zones are those clusters and those voids from before. And so now when I decide where I want to do business, or what areas of interest are really going to jump off the page for me, I've got the confluence from Delta, and I have the confluence from my trend analysis, these supply demand zones. And then obviously also volume profile. So, we're kind of bringing that order flow into that classic price action and, finding these levels of interest. And ultimately then, those levels just end up on my chart. So this whole process then, ends up with maybe 9 or 10 levels on my chart where I'm willing to do business. And it's just really, what is the reaction in them? So, obviously, if I called this 710 a breakout. So if this was a breakout cluster, if we pull back into that zone, this, what was resistance now becomes support. And I'm going to look for, confirmation from the order flow when we get into that area, which I think is the last piece, right? So then we have all of this process that brings you to an area of interest. We've got 9 or 10 levels we're going to watch for the day. Then I've got my execution chart. And similar to the way that we've sort of brought some of those other levels in, and I've got them turned off now, but I can bring in my areas of interest. And for me, it's area of interest, tools confirm, execute. And so even if I have a level that I like, if I don't see something from price action or order flow, whether it's our tools or just whatever you're looking at, a footprint, that confirmation is really big for me. So, even here, like, seeing the red dot for me is seeing aggressive selling pressure on the time and sales, and it's right at overnight high. That's a classic one that everybody probably has on their chart, kind of thing. And so again, it's now distilling all this information down into an execution chart that has some other nuanced things on that I'm watching for order flow. But at the end of the day, it's area of interest, tools confirm. And in doing the same thing, and maybe I'll kind of open it up to everybody else, but for me, this is all about consistency. I can talk about this process because it's the same thing that I do every single day. It does not change. And I guard that process pretty closely. And I'm also intentional about how much time I spend on it and what I'll allow to actually come into the process from the outside, and how much time I actually spend even looking at other things, whether I'm back testing it or just looking to see if it sort of will pay rent in my process. And so, that's kind of the top-down version for me. Maybe a little bit much for some, but for me, I do this day in and day out. I can get through my process in 10 or 15 minutes, and it's only 1 or 2 things for each chart. So,
well, a couple of things for me when I look at it, I see some of the similarities between the two of you, and I also see even the similarities between the two of you and me, and I'm not even looking at the same thing, but the way that you put everything together to know what you're looking for. I think the number one thing that I take from listening to both of you today is you do all this work, you put everything together, and then you try to simplify all of that work that you did. And I know that's a lot for everybody to come in. That's why this is recorded. You can go back and watch it. I see a lot of questions about this stuff. But what they do to them, to these guys, everybody, is that they get it in maybe a chart or two. And going into that day, they already know those areas are laid out for them. And when they get there, Then it's about coming down to execution. So everybody always talks about being patient. Well, the reason why these guys can be patient and they're relying on their plan is because they put the work in and they know what they're looking for. And then when it gets there, they then use order flow or other things. Look at what's happening on the day. Like today is a FOMC minutes. If you get a signal in an area at 2:01 Eastern, you might say, well, I don't know how heavy I want to weigh into this because how much does it matter here? And I think that it's also important is just how you guys layer things is something that I do as well. When, if I have an area of interest that's on my daily chart, I don't think enough people put that area of interest on the shorter term chart because you may not remember it. And when you may be also trading too much in front of it, or, you have to see it on that chart because visually, and that's something both of you mentioned, it's so important to have things set up to where when you are getting to those areas, you see it right there in front of you. Don't put a lot of this to memory. Put it to work into one chart. And I just want to go over execution real quick before I go into questions from chat because we do have several of them. Execution is obviously a huge part. I mean, I've really tried to talk a ton about execution. I actually talked about execution a lot years ago on the show initially, and I think a lot of people really almost didn't even understand what I meant. I mean, I know it sounds crazy, but I think that so many people think, well, if you have this strategy, you just go out there and you're buying and selling at the areas that you like. But once you trade for a little bit of time, you realize that it's just not that simple. Execution is really everything because your strategy itself is just the way that you view the market and you look at things. And then when it gets to the time where the market actually trades there, you're left with a decision now and how you go about that. And for me, what separated me, I felt in my career from an early trader to a trader that finally started to make money was my execution. My strategy was relatively the same. And you always build on it and add different things, which I'm actually going to use some of the things you guys talked about today. But we'll get back to you, Aaron, for a second. I want to talk about execution in the sense of scaling, trailing stops. We looked at all of your stuff today. I mean, I don't know if we want to go to maybe to the chart of each of you quickly and go over something, because I think that it's important that people understand that when they get to that area, are you jumping in front of it? Are you jumping in right at it? Is there a window of a range? I always look at numbers like mattresses on my strategy. If I want to be long, I got to give them a little bit. I don't let them just hit it and come right off. I mean, if I see it bounce really well, then I might be adding well away from my price because maybe I didn't get the full position there, but the reaction was what I wanted. I could talk all day about this, but we learned from you guys a lot today. I think what I'd like to do is, Aaron, maybe just go and show us something is to explain how you would execute the trade.
So there's a few different nuanced ways that I'll execute a trade off here. I will rarely enter on first touch. And I'm okay if I miss a trade because of that. Some of my favorite ways to execute are generally if we're, say, for example, in a downtrend. I actually want to see us break through with acceleration, like you see here, like an acceleration breakthrough. And then I'll short the retest. So that acceleration is a big thing for me. Like, for example, you see here a strong push forward, and I don't need to FOMO into it because a lot of times it's going to now come back down and retest that acceleration out of that zone. And I can try the long from there, targeting the next zone. In terms of trailing stops, I don't have a set trail on my stops, but generally what I will do is, like, let's say, for example, I take a long here. I'm usually going to reduce risk at either my first level, so maybe 5, 6, 7 points, and then potentially take one more off when we get into the next zone. And then if I still have one remaining, I will pull the stop up maybe to break even, maybe just above break even. And I want to see how it resolves around the next area of potential resistance and see if that can then turn into support and bust above it. But if it's struggling, if it can't get back above, then oftentimes I'll flatten the trade. Reason being is because of the way that I trade this, I'm okay with letting it then accelerate through here, retest, and then getting back in once I'm sure that this resistance isn't going to pull price all the way back down on top of me. I'm definitely one that likes to lock in profits, and I'll wait for us to be above resistance and then retest personally. I don't like allowing things to come all the way back down and stop me flat personally. So I would say that's just not taking any order flow or anything else into account. Also, probably more important on the execution side is the trades that I don't take. And I would say that this process got me to a place where I don't execute in here. I'm not taking any trades in this area. And you can kind of see that the area to trade today was here or up in here. And I've found, and I've done it before, where I wait for it to break out and I'm like, oh, it's going to go all the way up here. And then I get in late between my areas of confluence, between my areas that I'm watching. And that's where you take heat on trades. It's going to chop around your entry and things like that, at least with my work and the way that it happens. And so ideally for me, always looking for on trend. One time framing on a 30-minute is big for me. So for one time framing higher on a 30-minute, I'm looking for us to break through these areas. And this is actually session delta pivots on here that Fleri was talking about, the black lines there. So there's confluence. I like to see the confluence within his work and my work too. It's pretty nice. And you can see it's given up some nice bounces and resistance today, now back above it. But what I want to see is if we're one time framing higher, a look above that survives and then runs away. If we're one time framing lower, acceleration away, an inability to get back above. Sometimes confluence with VWAP is nice as well if it's inside of a zone. To then play it the other way, retest, maybe short it back down again. But it's really simple in terms of, I would say, how I execute it. Again, I'm dialing back into where is that chart? Into the, not just this, but also into smaller time frame. Well, this is a 30-minute chart, so not super small time frame, but into the delta. Is the volume tapering into that area or building? Like, I want to see volume tapering, not building, as we fall into an area where I'm looking to get long. And as we're moving up, are we building in volume? Are they absorbing? Are we just pushing through selling? Like, you can see the selling here, they're just pushing right through it. I'm still comfortable holding that. All this aggressive selling and they're still pushing higher. Not a big thing for me. Comfortable holding long through that and using this to kind of guide my process until the story changes in the DOM or the footprint, and buyers start to lose interest or start to get overpowered a bit. But ideally for me, it's simply a factor of kind of putting those two things together once I'm in the trade. It's really just about order flow and trading up to my next main target. And oftentimes, so once I enter a trade, you know, like if I put a bracket on it, for example, if I want to get long here, once I get filled, I'm going to move my target up to here, move another target up to here, and then just allow the trade to play out without too much interference from me. Because I found that interfering too much or getting too worried about getting too small time frame, I try to operate mainly from here, but at the same time, ensuring that I'm locking in the gains once I'm in the trade. So
that was a great explanation. I think it's so important to really understand your strategy so well. A lot of what we talked about today with the nuance to where you know how you're going to execute in these situations. You're taking primary trend. You're looking at the big picture. You're looking at a bunch of different things. So when you get down to it, you become a better executor of your strategy. I always say this is why I don't automate my stuff too. And people are like, well, if you have such a good strategy, why wouldn't you automate it? Well, I don't automate it because I think that's what defines really the trader is the better you are at executing your strategy is really what defines it. Right. I mean, I've had good strategies that I just poor at executing it because it just doesn't work for me the way that I like to execute trades. It's such a big part of it. We're going to go to you, Fleri, and we're going to go to what you're looking at. So show us here execution.
Yeah. So for me, for execution, again, it's area of interest, tools confirm. So even if I have a level marked, I want to see a few things. And, you know, again, we've said this nuance word so many times, but, you know, you'll start to see these things just reoccur. And, you know, the DOM, you just got to watch it. And there's a way that it moves, and it picks up speed, and you'll see people putting orders in, and there's nuance and kind of all these things that you can see. But obviously we've automated some of that stuff with Order Flow Labs. But what we're looking at here is, first of all, from the hourly chart, I talked about that top down sort of swing high, swing low analysis. I had this 11,852 as a level. And so as price pulls into 852, or this 852, we're starting to see some selling on the tape. And that's basically from these red dots. And then when buyers push up into that high, we're looking at a delta footprint now. You can see they basically get met by, whether it was passive or aggressive selling, but they get sort of scooped on here. So you've got 300 lots in NQ, which is sizable to get run over. And you've got the confirmation that there was selling on the tape. The time in sales was showing a pace of tape that was increasing. They sort of trap these traders. And then now we've got an area of interest from a swing high. We saw the activity of sellers stepping in at that area. Buyers got a little bit out over their skis on that area. So you could either trade that right in flow with just these signals from an execution perspective. But then when you pull back into that area and you retest your area of interest and you see the sellers there again, again, from the red dot there, one of our OFL studies, for me, that's where I get that area of interest, tools confirm, execute. As far as the brackets and things like that go, I'm a mix. It really depends on how the market's moving that day, but I would say 80% of the time I'm going to put a bracket on, and that bracket's going to scale out. In NQ, let's say it's like 15-point stop loss, at least that comes in to start, and might modify that based upon inflow decision-making process. But let's just say 15-point stop, 30-point take profit, and I'll usually take about a third. So let's say you peel off 2, and then at 50 points I'll peel off another 2. And then I usually leave those last 2 for discretion. And I like to let that last one go, or one of the last 2, or go till say 100 points, which is now we're getting kind of outside of maybe like a 2 sigma type rotation. And then sort of, I kind of like to call it earn the right to be discretionary on the last one, and then start attacking some of those bigger levels to levels. Because, I think especially with some of the way that I look at these things, you want to be attacking sort of like the next level on your chart, right? You did all this work and that you're expecting a reaction. So I really try to trade level to level after paying myself for the trade and the initial entry, right? So, we allocated some risk. We've now realized some P&L, and I've got a few runners left to start attacking some of these levels that I've spent all the time kind of working on, putting on my list. And so from an execution perspective, it's, it's a little bit of an inflow thing, but really it's, some version of let's let about 50 to 60% of the position pay for the expectancy of the rest of the position, and start attacking some of these levels that we have on our charts.
Once again, you have similar strategies, not the same, similar, and really different execution. To me, it sounds like you two go about your execution different. I mean, it just goes to show you that you could have the same strategy as somebody else and just really have a different approach to execution. I think this is one of the most personable parts of trading. I think that you have to find a strategy that fits in with you. I mean, I'm somebody who I just like to know, do I want to be long or short after a period of time of the morning? Once I see that, I just trade it out as long as I can, as much as I can, and that's just, I'm a busybody too. So I feel like when I get into something, I'm rotating in and out of stuff a lot, so that is just the way I have to be. When I try to just sit back, I feel like I'm holding too long, and sometimes I just get, it's just, so my mindset is click in, starts to go my way. I'm very active, aggressive as it's going. When it's not working, I'm peeling them back, I'm putting them back on. And that's just my style, So I think that for all the traders out there hearing you guys today, understand this is very personal, and I think that they explained it so well, from their strategies, their trading plans, to how they go about executing them. And this is what encompasses the entire trading plan, right, guys? Because your execution is kind of the last thing we talked about, but you did all this work and you did everything. And it comes down to now I'm sitting there at the screen, and I got to go and point and click that. And what's the best way for me to get the most out of this? And I think that's that final part of the of the equation here, of that true trading process.
Yeah,
So
it's that confidence, right? I mean,
yeah,
we do all this consistency, confluence, and confidence, right? Like do
yes,
the same thing each day, build your process. By being consistent, you get a good feedback loop. If you're not consistent and you're constantly putting new things into this idea or your trade plan, then you have no good feedback because you need consistency in order to get good
exactly.
feedback. And one thing that Aaron and I talked about is being getting that confluence and having like a multimodal system too. So on the surface, it might look like I'm looking at a lot of things, but really I'm just making sure that I have multiple modes to my plan so that when there is that confluence and a level shows up on this chart and this chart and this chart, now I've got confluence. And again, all of that leads into getting that confidence to be able to execute and, get that macro tactical, see it, hit it. He had, and what really was a big aha moment for me in this whole building a process and where I felt comfortable with it was, we used to trade on Mike in the mornings, and I was struggling with confidence, and we would talk about things, and I'd be calling out what I was seeing, and he would be taking those trades with the confluence to his levels and what he was seeing off of the DOM. And he said something to me that I'll never forget. And he said, you do all this work and you spend all the time to build this plan, essentially like, how dare you come to the market and not execute on your plan, or at least try to. And he said, I have enough confidence in what you're saying to help, be confluent to my plan and execute on it. You should as well. And that was a really big, like, whoa, I do need to just start like trusting this and clicking the button a little bit more, because we do spend so much time at our screens, and really at the end of the day, the goal should be to spend less time and get this thing dialed in. So that was a big thing for me. And that confidence, that see it, hit it mentality, and the ability to just click the button. And, it's a cost of business. Sometimes you click the button and your plan was terrible or you won't execute on it. But if you do the same thing day in and day out, you'll get a good feedback loop, and you'll be able to make those small tweaks, adjustments, or kick something completely out of your process if it's just not paying rent at all.
Yeah, and I don't know if you want to comment on any of that. I think it's confidence to me is everything. I know that I'm confident in what I did before I got to the screen. So when I get there, that's why I'm really a very aggressive, I would say intraday, I'm pretty aggressive, because I believe in what I did. And if I think it's working and I see it working and the market proves to me it's working, then I take as much as I can. That's just the way I'm built, because I know that there's times where I'm wrong, to where I also have to have that same type of aggressiveness of getting out. So I'm confident getting out for the loss, because I'm like, this isn't working, and confidence is everything in a sense, because that's what gives me the freedom to click when I see things. It's so important. I don't know what else you want to talk about that with that, Aaron.
Yeah, man, I talk about that a lot in terms of building confidence. And, to Flery's point, I mean, it really is about trying to do the same thing day in and day out, creating a routine around creating some sort of a plan or design around how you plan to trade the day, and doing it day in and day out. And at first I wasn't very good at it. And the thing, like, it would be okay and it would work out okay sometimes. And then you start to get better and better and better, and confidence comes with that. I found that, like, a lack of confidence with most people, or people that I coach, or people in the Mind Unbound program, it comes from a lot of times a lack of strategy, or really trust in their strategy. And the more times you do something and start repeating that process again and again, you begin to build trust in your process. And I think once you actually trust your process, confidence is somewhat of a byproduct of then being able to execute the process. To me, it's like a 3-stage thing. First, you have to have a process of some sort. Then you got to build it to a point where you're comfortable with it and you can trust it and you see that it's working. And then there's the execution side where, you see that it's working, you try to take a trade, and then you paper hand it for 2 points. And then you finally start to trust and actually execute on it, and you can habituate that behavior. And that's where you become, I think, a much more confident trader, is when you can kind of put all that together into a certain flow that you bring into every day. And but it all starts with first having some sort of a process, and whatever that might be, and repeating it again and again. To me, it's all about repetitions, putting in reps in the market.
100%. And it's so well said. I'm going to go to some of these questions now, and then we'll wrap up from here. I like this question for Fleri to start, and I'll put it in there. And then Dan is saying, how does order flow help with where to define stop outs, or do you just always have a defined dollar risk per trade?
Yeah, the old risk question. So order flow specifically, I think, can help because especially if you're entering obviously in flow, right? So you're buying and you want to see support from buyers. Um, well, if a bunch of other buyers and you were being very aggressive at a spot, call it the low or whatever, if price retraces onto that and we don't see more aggressive buying and the buyers are sort of exhausted, that's usually not a good sign. And when you get below those guys, now you're sort of lumped in there with potentially all of these stops that are sitting down below. So when you are entering based upon order flow, you also want to see that order flow support that position and continue to move forward, whether it's on sort of an initiative move away from the area, but certainly upon return. So from a risk perspective, dollar from a percentage of your account is a great place to start. But I think that really comes into one of those nuanced things of if you're starting to see your idea work, and I love what you said about this, like when I see my trade working, like I'm aggressive and I'm getting in there. When you start to see your trade work, you should give it a little bit of room, in my opinion. Like you got to wait and see, like, hey, if buyers are active, how, let them kind of see if they're still going to buy this area, because not every trade you're going to buy and the thing just shoots 50 points straight up and you're a hero and all your take profits are already getting hit. So I think you want to see the order flow support your position not only on the initial move away, but also upon return. And so it can tell you that you're wrong really quickly as well, I guess is what I'm getting at.
Anything to add to that, Aaron?
Yeah, I mean, if I was to say, there's a couple order flow related things that will have me move a stop up. So if we're moving higher and I see that a bunch of buyers are getting absorbed on the way up and we're still pushing higher, no big deal. But if there's a key level in there somewhere or something of importance, I'm going to move my stop up under all of that buying delta, because that to me is oftentimes poor support. So if we come back down and we trade below all those buyers that are getting trapped on the way up, oftentimes that's very poor support. They'll start liquidating, they'll get out of break even, and the price is going to come shooting back below. Same thing with the zones. If we accelerate through, come back and retest and hold, I don't want to come back through that area. Like I know that if we make an aggressive move or an impulse move higher from a certain spot, I don't want to see us come all the way back below that current swing low right below that. So order flow related, that's a couple of things that I look at when I'm in a trade where I might move a stop up, is a couple of things like that.
I'm going to go to a couple more questions, then we'll wrap. Michael O is just asking, hello, Deli, what is the best way to learn futures, or where can I get it? Thanks for doing this. Really appreciate it. Obviously, guys, this is a very new person to futures. So first, I would say, Michael, to learn more, you can go to my site, anthonycrudele.com. Everything is free on there and learn. And then obviously go to CME Group to learn about a lot of the products. But I'm going to go to you two guys just to talk to him about what do you do at the beginning of learning about futures? I have you guys both here today to talk about developing your trading plan. You guys have done that. We'll go back to you, Fleri. Talk to Michael about who's just getting into futures. What do you think is the first steps to learning how to become a trader in this market?
Yeah. I mean, we all go through that, right? Like the rabbit hole of trying to find out, what you need to know. And, is there some, one set way or some process that's been defined and you can just kind of replicate it, which I think we've all kind of found the answer is no. And even if you did have a process that you could just carbon copy, you'll end up making it your own anyways. And so, I would just encourage you to start the journey. Great books, great YouTube content, again, shows like this, that will give you little clues to the nuance that some of these traders are using. And I think some of the best aha moments that I've had were, experienced veteran traders sharing like one little nugget. And that one little nugget, when I applied it to the things that I was spending hours and hours studying in the books that I was reading, just like blew up into a setup or a bigger idea. So, do the work, read the books, go through the rabbit hole, YouTube, find good content. And I think most importantly, ask lots of questions, but ask smart, thought out questions to people that are out there. There's people that if they know that you're putting in the time and the effort, and you ask smart questions, and you're respectful, they're going to give you that little nugget that might sort of expand into bigger things. So obviously you need to know about some of the general things with futures tradings, like when does news drop and things like that. Like, what is the baked in leverage to the products and, session times and things like that. But all stuff that you could find from CME and things like that. But I think as far as like just getting this information, the books, the content, and, other traders, and just being respectful and asking smart questions to smart people.
Yeah. And I can't stress enough on how good even a resource Twitter can be. If you can, get past some of the negative things about it. Right. I mean, you've got to learn how to actually use Twitter, I think, because I feel that Twitter is such a great resource. It's how I met you guys, how I've met so many other people. And I've learned a ton from Twitter, but you got to be careful, I think, as a new trader, because you don't know who you're following or what it is. So do your homework on who you're following and take the little bits of information that you learn and build your own strategy. I've talked a lot about today on how trading is personal. You could take Fleri's strategy, you could take Aaron's strategy, you could take mine. And if it doesn't work for you, even though we're making money on it, that's okay. I mean, you got to find what works for you, because as we talked about today, confidence, and you got to be a good executor of your strategy. Just very, very important. And give yourself time. Believe me, it's going to take time. Aaron, we'll go to you. What do you think about it?
Yeah, I think you guys nailed all the resources. I would say that on the process side of things, the best way to learn futures is to really start slow and take very minimal risk in the beginning. I see a lot of people come in and start swinging E-Minis and NQ raw like right off the bat. And I think it's super important to first start with developing some sort of process that works for you. So whether that's trading on Sim or one micro, I mean, whatever that might be, is first building an understanding around some sort of market structure, whether it's with bar charts or with volume profile, whatever it is that speaks to you, and having a clear understanding of who you are as a person. Do you want to be a scalper? Are you, someone who can withstand holding for long periods of time? Like what type of trader you want to be, to define what that strategy and what your own process looks like. And, like I tell people all the time, like, start with very small. Once you can handle that and consistently pull points out of the market, if you can consistently pull 10 ES points out of the market every day with one MES, move up to 2, move up until you can no longer pull 10 MES points out of the market every day. And then scale back once you start to emotionally trade or make poor decisions until you can get through that block. But I think the most important part of the process is the process of learning is actually how you're going to progress yourself towards where you want to be. And for me, there's sort of a path to that, and it all begins with strategy, and then we got to tackle the emotional demons as they pop up, and take it from there.
I'm so glad you mentioned micros too. It's such a important part of, I think, learning how to trade is to be live. I think that Sim is definitely where you start. But I think that you can be on it for too long, and I think that you start getting to the point where it's not helping you anymore. And going live with micros is a great way. If you don't know what micros are, just like I said, go to my site and see there's micro products for pretty much everything you want to trade, and I think it's a great place to start. I would go there. I don't care how much money you have before you go into the big contract. It's not how much money you start with, believe me. We'll go with Jason Taylor for the last question today. Jason, he's always putting comments in today, so I appreciate that. I'm going to get to your question. When using VP, how much weight, we're talking about volume profile, do you or should you put on POCs, VPOCs? I often hear mentioned on volume point of controls and how important they are as far as poor structure. We'll go the same way. We'll go Fleri and then with Aaron.
I mean, personally, I don't put a ton of weight into naked pox or point of control unless it's one of those island days that I kind of outlined earlier. So the point of control from the last day before we broke balance, or the day that imbalance started, is a big point of control for me. Intraday or intrasession, the point of control, or sort of like the mid of value, it's important to see how structure builds off of that. But as far as like I have to see X happen above the point of control, or I trade like this when we're near the point of control, You'll hear people say things like, don't diddle in the middle kind of thing. Sure. But, for me, I want to see how structure's building around my pivot or around my point of control. And I want to see price return to the last point of control before we moved from balance to imbalance.
Aaron?
I would say that the point of control is important to me in that I do not want to execute anywhere near it. So I try to stay away from trades anywhere near the volume point of control intraday, simply because if that's the fairest price of the day, why would I want to pay the fairest price? I want to buy in the LVNs, the low volume areas, away from that, and then target moves back to the point of control. So I pay a lot of attention to that in terms of where I want to execute away from the point of control, playing for price to move back to it. But I do use it as a sign of importance for acceptance. So we talk about time, and people always want to understand acceptance above an area or acceptance above, a certain out of balance or whatever. The point of control can often guide that. Okay, we're putting in a lot of volume up here. We're spending a lot of time up here. It's moved the point of control above the prior several days. That's a sign of acceptance of new prices and that we're moving higher, but much more so on the target side than on the entry side, for sure.
Great answers, boys. I have to put this up because this was making me laugh. So if we go back and when you guys watch the video, Richard goes, "What's it like to be the only one with hair?" We were kind of laughing in chat.
These are facts.
Oh man! And then a couple of these are just kind of quick questions. I'll let you guys answer. There's just 2-second answers. What is the best markets for beginners? Slow like ZN or fast like NQ? For me, I'll say this first. It just depends on what type of trader you want to be. Yep. ZN, price matters a lot more than it does in NQ. So if you like an area that if it hits a price and it holds and it's going to move away from it, I wouldn't say necessarily slowly, but for all intents and purposes, compared to NASDAQ, it's, a turtle compared to how the NASDAQ moves. You got to build a relationship with these markets. If you're a new trader, go on Sim and try them, and they are different. NASDAQ moves a lot. S&P, is kind of in the middle, very liquid. You've got the Russell, you've got Dow, you've got gold, you've got oil. All news hits them in different ways, So I think that you just have to go out there and try this stuff. I think it's so important. Everyone's for you guys. I don't know how much more you're going to add to that, but I think real quick, give everybody your Twitter handles because I know a lot of people are asking that as well. We'll go Aaron and then Fleri.
It's at Living Right Co.
Mine's at Fleri_V.
Yeah, a lot of these are a lot of things we covered. I mean, just this other one is he's just asking, is there a specific time of day that you guys trade? And you guys are intraday traders, right? Are you guys trading at night at all?
No.
I say no, but if the setup's there, yes. Guilty of probably spending too much time looking at the markets on my phone and knowing where my areas are because I spend so much time doing it. So I'll run into the office, but my day in a perfect day lasts about 10 minutes, but usually lasts about 2 hours from like 8:30 to 10:30. And then I try to focus on, helping the folks in Order Flow Labs or just, whatever else is going on. Enjoy life. That's, that was the idea of jumping into this market and trading. So when the opportunity presents itself to get an early day or head to the cabin, try to take it.
A lot of guys are asking about, order flow tools, where to use them. I'll leave it to you guys to go into chat or put that stuff in comments there, reach out to them specifically. Before I let you guys both go, I know that people are also talking about, Aaron, you do a weekly prep. So maybe we'll just go around the table here and just let everyone know where they can learn more about you, where they could ask some of these questions, because some of these questions are pretty specific about you guys and order flow. And I'll let you let these people reach out to you individually.
Absolutely.
So Aaron, tell everybody where they can go.
Sorry.
Your website, things you're doing.
Yeah, I post the weekly plan on YouTube. I post it on my Twitter every Friday or Saturday morning, where I go through a top-down analysis, that basically a detailed analysis of what I just went through, but in like a 20-minute video. You can find that on my Twitter at Living Right Co. Or on YouTube, which is Mind Unbound Trading. I post my daily plans and things like that. Sometimes on Twitter, I have a private Discord for that as well. Again, you can go to my Twitter to find more information there, my pinned tweet. But always, as always, guys, feel free to reach out, shoot me a message if you have any questions. I'm happy to always help people anytime. So you can always message me on Twitter or outside of here. Aaron at Mind Unbound Trading is my email. If you don't have Twitter.
Fleri.
So again, at Fleri_V on Twitter. If you want to see a bunch of basically some of the things that we've talked about, I pretty much, as far as content on Twitter, am always just posting these same things, like the nuances that I'm seeing. And somewhere in that feed is a big description, if not a YouTube video, to, how did we develop these levels, and what am I doing in and around the levels. Obviously Order Flow Labs, so at Order Flow Labs on Twitter, or orderflowlabs.com for some of the tools that we've created to automate a lot of the stuff that you might have seen when I was sharing the screens. And obviously even more from an execution standpoint, since it's Order Flow Labs, and we're looking at order flow as well as structural tools. So those would be the two.
And follow these guys on Twitter. Give these guys a follow and give them a lot of love with maybe hitting the like button and resharing this if you guys enjoyed today's show. I can't thank you both enough for taking the time to speak with me. I've enjoyed your stuff on Twitter for a while. First time we got a chance to speak. Big fans of both of yours, and I wish you guys both the best. And like I said, thank you again so much for joining me. I had a lot of fun. I learned something, and I'm getting some of your tools to add to my strategy now, so I appreciate that as well.
Likewise, Anthony. Great to meet you as well, man. Thanks for having us.
And all of you guys out there that tuned in today, thank you so much. You guys are the reasons why this show exists. I hope you guys all had a wonderful 4th. All my friends here in the U.S., let's be ready for those FOMC minutes. Nothing like waiting for old news, right? All right, everybody, trade well. I'll see you next week. See ya.
Take care.
Thank you for listening to Futures Radio Show. If you enjoyed the show, please leave a 5-star review on iTunes. Never miss an episode. Go to anthonycrudele.com and get on our email list for show notifications and for free content that is exclusively for subscribers. Also on anthonycrudele.com, you will find tons of videos and education on trading futures, options, and crypto. Past performance is not indicative of future results. Opinions expressed are solely my own and my guests, and they do not express the views or opinions of my sponsors. Futures Radio Show is produced by Crudele Productions.